Okay, this is our charting call for the evening, but what we're going to do first is we're going to talk through the stuff to do with gamma, because that is something that we use during the day a lot. We seem to be we're using those graphics, and and people are wondering, what is it? What are those charts? What do those charts mean? And how can we use them? How can we analyze what we're looking at? And I want to, if we can, have a better understanding on what's actually being done inside these charts. So let's do that. If y'all are okay, let's start there. Okay, everybody can see my screen. Hope y'all can see my screen. I'll make this as big as
Yes.
possible. Cool. Okay, so what I did this morning, I woke up and I just pulled in just a chart that we had, and this was from Thursday, but I'll walk you through the whole conversation that I had with ChatGPT. So as we go through this conversation, you're going to be able to see what I asked Chat and how he responded, and this is hopefully going to clear up some things on because I was asking the same kind of questions that we ask in our talks, so we can get some clarification. So I said, hey, morning, Chad, because Chat GPT, I named him Chad. I'm trying to understand gamma exposure for my option selling zero DTE credit spreads. Can you explain to me in a simple way what is positive gamma, negative gamma, and zero gamma? Also explain this graphic. I'd also like to know how I can use this info to select my strikes throughout the day. So I picked this graphic. This, the time was 11:50, and he was able to look at it. So he says, good morning, because, Chat knows me. Let's break this down like you explained to a friend in your option seller zone with just the right amount of nerdy flavor. So we talked about gamma exposure. Gamma measures how fast delta changes when the underlying price moves. Delta tells you how much an option price moves. Gamma tells you how much delta will change if the stock moves. And I don't know if that's necessarily important per se, but this information is here. But for gamma exposure, think of it as how much market makers are forced to hedge when price moves. So we're talking about market makers. It's a big deal for zero DTE trades because the hedging behavior can influence the movement of SPX intraday. There are three types of gamma behavior. There's positive gamma, which is the green bars. Those big green bars is positive gamma. Market makers buy low, sell high to hedge. It's a stabilizing force, reduces volatility. It's common in long options, being close to the money but hedged. Negative gamma, or the red bars. Okay, so positive gamma is the green bars, negative gamma is the red bars. Market makers buy high, sell higher, basically chasing the price. They basically are adding fuel to the price swing, so this increases the volatility. So it's almost like when you're in the green area, the price is more stable. When you're in the red area, the volatility is now increased. It's now gotten to be more volatile. When you're in the red area, there's more volatility. All right. It says it's usually where traders have sold options and the market makers must scramble to hedge their moves. Zero gamma, which is at the place where it flips between, positive and negative. No significant delta change is expected. It's less influence on the price moves, and it's basically neutral hedging. So he talks about what is the chart there. You got the x-axis, the SPX price, the y is the gamma. You got the red bars left, which is the SPX spot negative gamma. Green bars are the positive gamma. The dash vertical line is where SPX current price or spot price. And you got the highest GEX peak was at 56.50. So remember, we were looking at this chart here. We're looking at this one, and the highest GEX price here was at that 56.50. So this is the chart we're keeping in mind as we're talking. This is what I asked him to talk about. Okay, so it's showing the highest GEX is at this 56.50. So that's what he's talking about here. Let me get back to where I was. Highest GEX peak 56.50 might act like a magnet or pinning, especially like it's a gamma, especially if it's a gamma wall. Okay, so remember I've talked before about how the big bars could be like magnets. It turns out that the magnet or the big bar is the green one can act like a magnet, not necessarily the red one. Okay, because I think I've said before that the big bars will act as magnets, but really the green one is the one that acts like a magnet and does what's called pinning. And y'all might have heard this phrase before, is pinning. Basically, it'll pull it there, and because it's a magnet, it'll try to pin it in place. All right, this can be good information for us. When it's up there, we'll know it's gonna try to stay. All right. The bottom chart, which is that line at the bottom, like we talked about, what is the line at the bottom of our chart? And let me see if I could, let's see if we could get one. So if we can keep, maybe we could keep a picture of our chart. We can keep a picture of one of these photos on the screen. So that way this was the one. So if I kept this on the screen, I'll minimize this and then I'll bring this one over. Let's see if it'll let me bring it over. Yeah, I can try to bring this over maybe. And that way we'll know that this is what we're talking about. When I'm talking about that the line, the bottom line, this total gamma. So this is the line at the bottom is what I'm talking about. It says bottom chart, total gamma over time. This talking about this blue line down here, which we didn't have any clue. I didn't really what this was about, but now we're going to talk about it. It shows how the overall market gamma exposure has changed since the open. So it's kind of going up and climbing. Rising GEX or blue line means the market is becoming more pinned or more stable as the day progresses. So as this blue line is going up, the market is stabilizing as the time is going on. So going up is a good thing, it's more stable. Going down is more volatile. You're currently in a positive total gamma territory, which is 1729. So the total gamma up here, 1729, this number at the top is our total gamma. Let me get my pencil back. Come on. This is total gamma right here. Okay. And then we know that this number up here changes. We've seen it at negative something, something. I've seen it at a positive 11,000. I've seen this number be all kinds of things at the top. All right. Okay, there's that. Okay. How can you use this for zero DTE credit spreads? Okay, so you can trade away from the walls. A big positive gamma areas of green can act as pins, so they're less likely to be breached. Selling credit spreads just outside these zones may give you a buffer. So go outside of these zones on the big greens can give you some buffer. So up here, go above, the big green zones, go below it. If it's going to pin in these green areas, we could potentially iron condor in that area. Beware of the negative gamma zones, which is these reds. If you sell spreads in the red zone territory, expect higher price swings. These areas can be ideal if you want quick premium, but they're risky. Once it gets into this red area, we'll talk about in a minute, it's more like a slide. This is not really a wall, which is what I thought it was before. This big line is not a wall anymore. It is more like a slippery slope. Once it hits this line, it can slide down further. Okay. Spot price and strike behavior, sorry. If SPX is inside of positive gamma, you can expect calm, what does that say over there? Yep. You can expect calm price action is good for iron condors or spreads that need time decay. So that means if you're up in here in the green area, iron condors are good here. Theta decay, time decay is good. If SPX is in the transition zone or near negative gamma, you need to brace for breakout. So when it says transition, what is the transition zone? Transition zone is in here when it's starting to get in the middle, and this is the negative area. So when it starts to get into the transition and negative, then you got to be mindful because it could break out going that way. Okay, we're going to break out going in the opposite direction, right? You got to make that it could possibly do that, all right? Or it could possibly bounce back into the green, but you just need to know that when you're in this transition area, you kind of need to just chill out and wait and see what happens. Writing? Let me make sure I'm not missing any questions along the way. If y'all got some, y'all put them in the comments. Lowe says it's similar to what I asked Copilot. I like that there's information about market makers. Okay, so time of day use. Okay, use this chart mid-morning and early afternoon to see if gamma is increasing or stabilizing, or if it's decreasing, which means there's volatility ahead. Choose strikes where gamma exposure drops off, like surfing behind the wave, not into it. So when it says pick strikes that gamma is dropping off, you would look at picking strikes over here where it's dropping off and over here where it's dropping off. All right, you want to go maybe here, right? I guess depending on where your I was thinking of over far as this, but that will put you farther away. But we're going to continue on, go on through our little reading here. All right. Example strategy. If SPX is at 56.36 and the gamma peaks at 56.50, so current price is here, peak is here, you might sell a put spread at 55.85 in the red zone. So what it's saying is if the price is where it is right now on this chart over here, you could sell at 55.85. 55.85 is actually right in here. This is 55.85. In the red zone if you expect a bounce, but know that it's a little risky, and you can sell a call credit spread at 56.80, 56.90. 56.80 and 90 is up in here. So this would be your CCS would be here, and your PCS could be here. And you're doing that with the thought that price is going to stay around this pinning area somewhere where that high place is. That's your thought and expectation is that price is going to try to pin itself in this area. Okay. All right. Then it asked me, did I want to create some stuff? And we did. So I said positive gamma is more stable and can work for iron condors because price is less likely to make dramatic moves. And he said exactly. Positive gamma creates a more stable environment, which is perfect for iron condors or any neutral options. You can sell straddles or strangles if you're bold, credit spreads near the current price, or butterfly spreads. All we do is credit spreads. I don't do butterflies, but if you do, that's what Chad says you can do. Why positive gamma works for iron condors, market makers buy low, sell high to hedge in positive gamma zones. This dampens the wild price swings. If SPX starts drifting towards the edge of your condor, the market often self-corrects as dealers hedge, pulling price back toward the center. So if price starts to drift away, and we've seen this happen, price drifts toward the edges and then it'll come back in, it'll drift and then come back in. We've seen that happen. Once price is in the green area, we have seen that happen. Okay.
Miss Arlissa.
Yep.
Hello. Can we talk a little bit more about what that means with it's something about hedging you just said. Like, what does that mean for us if the market starts to hedge and self-correct?
So what Chad is saying is that if we're in the green zone and it's more stable, the market makers are only keeping it stable. Because it's stable there and it starts to drift too far out, they're going to do stuff to bring it back to the center if it's already in the green. So that's what's going to keep it staying in the green. It's when it gets into the red that you more volatility happen. I think I'm going to talk about it here in a couple sentences, but when it gets into the red, they also start to do their hedging. And when they're hedging down here, they really are adding more fuel to the fire. So when the hedging is happening, like, okay, when price drifts out here, they do their little stuff to try to bring it back to the center. They want to try to keep it in a stable place. But if price gets too far out into the red, which happens for all the reasons or whatever, then they start putting in, orders and whatever. And basically what ends up happening is they end up adding more fuel to the fire, which causes more volatility, not less. And this is why you sometimes see a slide happening. When you get red, it gets more red. And at some point it does stop being red and starts going the other way. Right. So that's when you mean hedge. I mean, I don't know exactly how that works, but that's the understanding I got from the talk that me and Chad had. Okay.
Thank you.
Okay. Look at here's an analogy that was given. This may help. Think of positive gamma like guardrails on a bowling lane. The price may wobble left and right, but it tends to stay in the lane. That's what you want when your profit comes from time decay and bounce. So when you're in the green, once it gets in the green, this is like you're inside the bowling lanes. It wants to stay up here in this area. But when if it was to drift out, then that's when the volatility increases and we start running into issues. Okay. Okay, so then I asked the question, when prices in the big red GEX zone, are the market makers, I meant to say makers, liable to hedge to bring it back positive? So I was asking if it's here, if it gets down into the red, are they going to try to bring it back positive? So Chad said, great question, but the answer is a little twisty. Let's untangle it. When prices in the red area or the negative area, no, the market makers are not hedging to bring it back to positive. Instead, they hedge in a way that chases the price but doesn't control it. So in negative gamma, delta is increasing faster as price moves. So they must buy as the price rises, which fuels the move. So at the beginning of that, I'll talk a little bit about delta and gamma kind of working together. This is where this information comes in. Talking about the delta, how it's fast moving and not. But in negative gamma, delta is increasing faster as price moves. So they must buy as price rises, fueling the move, and sell as price drops, which basically accelerates the fall. This creates more volatility and not less. So this is, I think I put this in one of the graphics I put inside the chat today, talked about this red GEX zone, that when it's in the red, we're not necessarily going to be the wall here to push back to the green. Basically, when it gets in the red, it keeps redding, which is why we see when price starts falling that it kind of keeps falling, like it speeds up and it falls even faster. That's what's happening. That seems to be what's happening here. So he says, so what's happening? It's not that the market makers want to bring price back to positive gamma. They're just trying to stay delta neutral. But in negative gamma zones, their hedging causes feedback loops. Price becomes slippery and it becomes breakout prone. They're not acting as stabilizers, but they're accidentally adding fuel to the fire. But they're trying to get back to delta neutral. So though they're not trying to go back positive, they are trying to get back to delta neutral, which is right here. So we're not necessarily trying to get plus, but we're trying to get to neutral. And neutral is above where, if we're slipping, neutral is back up here. So they're trying to go back to neutral, not necessarily back positive. Okay. And I hope I'm explaining this as best I can. I'm just really explaining what I see and my understanding of what I've read. Okay. How do we trade this insight? Be cautious with iron condors or tight credit spreads in the red zones. If you're feeling bold, you can trade with the momentum, directional credit spreads, which basically bullish put spreads if the price is breaking upwards. Or if price starts to go upwards, you maybe can ride with that. I guess if it's going downwards, you can maybe ride with that. Watch for violent moves around gamma flip levels from red to green or vice versa, which the flip levels is right here where that neutral is. It says look for violent moves around those flip levels. Okay, positive gamma, which is stabilizing, price gets pinned. Negative gamma is destabilizing and price can fly, which probably is why too, when we do see the turnarounds happen at the bottom of a red, when it turns back pretty hard and it keeps on moving, because once it does change direction, it starts to move the way it's going. Okay, market makers don't bring it back. Their hedging amplifies whatever direction price is going. Righty? Okay. Identify the gamma flip level. The flip is a transition zone, which is often a battleground. In your image, the flip happens above 56.25 and flips positive by 56.50. So this is that middle area I was just talking about. We want to know what each side means. Market makers chase price in the red, volatile and risky. Above the flip, market makers dampen the movement and it gets a lot more stable. We talked about the price selection for trades. Okay, if you're in the red zone, you want directional credit spreads, wider wings, and faster exits. Wider wings and faster exits. Hold on for a minute. No news, no news. My husband is sending me a message because we were waiting for some news back and I didn't get any news. Okay. Nope. Okay. So, example, if SPX was near the flip zone, let's say it was at 56.25 or near this flip zone, then you could sell a bull put spread. If momentum is up, you could, 55.80 going upwards, or you could have done a bear call spread, 56.50 going down. Basically, if price is hanging out in this flip zone area, you could go outside of that area and trade if you wanted to. If price was hovering around in the middle area, you could go outside up here, outside down here, and trade out there. Or of course, you could wait and just see what actually happens. See what goes. Okay, watch the total gamma trend on the bottom chart. If it's rising, the bottom chart we're talking about now, if it's rising like it is in your chart, it means more stability is building. If it's falling midday, you can expect more chop or trending moves. That's when gamma flip zones get tested. I put this, I have a one-page document that I'm going to give you that includes a lot of this stuff I'm talking about. ChatGPT created me a one-pager and I put it into a PDF and I'm gonna give that to you. I might have already attached it to the Telegram. I think I did. If you look at the bottom or almost the bottom of the Telegram, I think I included it already. Quick cheat sheet for the green and the red and the flip zone. Yep. So I said, is the objective of the trading day to get the gamma back to positive? This was my question to Chad. Is the objective of the trading day to get the gamma back to positive? And he said, no, the objective of the trading day isn't to get gamma back to positive, but it often feels like that's what's happening because positive gamma means the market is calm and institutions, especially dealers and market makers, like it to be calm. So that's not the objective, but it usually seems to be like that's what is. So what is the real objective? Okay, the market itself has no goal. It just reflects dealer hedging, trader positioning, news flow, and order flow dynamics. However, gamma influences how the market behaves. When total gamma is positive, the market tends to be more stable. Dealers hedge in ways that suppress the big moves. And when total gamma is negative, we often see explosive moves, especially intraday, as the dealers hedge in the same direction of the price, which increases momentum. Why it looks like price wants to go back to positive gamma. If SPX enters the red zone, you may notice that it bounces back towards the green area. That's often because the dealers are hedging towards adding pressure against the move. There's a lot of open interest generally in the green zone because option positioning attracts the price back. So that may be a thing. Open interest starts to go back to the green zone. And institutions prefer lower volatility, so their strategies naturally pull price back to the calm zone. So that's why it feels like it's going back to the green. So your takeaway as a zero DTE option seller, don't trade assuming that gamma must return to positive. We're not trading with that thought in mind. Trade based on the current gamma environment. If it's positive, structure for stability. If it's negative, prepare for fast moves and favor directional trades. Okay. So he gave me a gamma mood meter to talk about positive, negative, and all that. I put that into the one pager. Choose a strategy based on the SPX location. I put this in there too. Okay. Okay, wait, I'm still information here. Okay, here we go. How early in the trading day can I do the gamma checklist? Because he gave me a checklist. How early in the day can I do this gamma checklist on SPX? It changes so much through the day. So he said gamma can be like a moody cat, cool at the open and spicy by noon. But here's how to work with that mood swing and still use the checklist. Okay, so in the pre-market, you can get the big picture what's the gamma setup for the day. Use the pre-market GEX data, which we don't really have pre-market. I don't have access to it, and I don't know if I would go looking for it too much, really. You can spot the flip zone and the dominant walls. And that's because we can see, I can see this information at 9:30. I don't have to go looking for it in the pre-market. Great time to decide. Is it shaping up to be a condor day or a momentum day? See, with SPX, we need to wait, honestly, till the market opens so we can see stuff start to happen after 9:30. But don't set your strikes yet. Just frame the battlefield. After the market opens, this is what I put in our paper, from 10 to 10:30, this is the sweet spot for the checklist. So this is going to tell us here why 10:30 is a good time for us to be looking at times and entries potentially. 10 to 10:30. GEX has usually settled based on real order flow. Gamma flip zones become more reliable. Dealer positioning is starting to show, and this is your go time for choosing strikes. So 10 to 10:30 is where you can see this flip zone is stable, set. You've got your high and your big green and whatever kind of shows itself, and you can start to see some order flow. Midday, basically, you want to check to see, has gamma flipped? Are you still in a positive or a negative territory? Can you tighten or close your spreads early? Okay, this is clutch if you're running 1 DTE or 0 DTE trades that need adjusting. Okay. Final word. The key is to anchor your trades around the 10 o'clock gamma reality, then stay flexible in case gamma flips and tries to punk you. Don't try to punk us. No, no, no. He's going to create a visual roadmap with time blocks, actions, all the good things. Okay, so then I brought in this second chart. Okay, then I brought in this chart here because I wanted to look at the this second chart. Okay, let me pause with right here and see if anybody's got questions so far. Anybody got questions so far? We're covering a lot, and I think we're I feel like I hope this is clearing up some stuff along the way. I think this was the one I brought up. There we
Is
go.
it safe to say that the higher the higher peaks in the gamma, that's considered the wall? Or is it yeah, I just
The
want
peaks on the green are considered the wall. The
so the
peaks
taller parts. So
yes.
the highest part, that's considered the wall.
Yes, yes. But that is, but the green is a zone. That whole area up there is, from what I understand, the whole green is a zone, an area, but the highest peak is the wall. It's like the pinning place. I won't say a wall. It's like the pinning place. So yes, you could call that a wall too. I can go with that. So this was my question to my next question was, okay, let's look at this image, which is the same one on the right-hand side. My understanding is that the big bars, whether green or red, are like support and resistance zones and that they're magnets. But I've also read that the green is the magnet while the red repels. Can you help me understand how to read and use what this chart provides? So he says, yes, Arlissa, let's decode this chart so we can use it like a GPS for your 0 DTE charts, okay? This chart is an SPX gamma by strike, and you're exactly right. The big green and the red bars are key zones, but let's clarify the magnet versus repeller thing because it's nuanced and juicy. Okay, what you're looking at, we've got our x-axis, which is that's not important. Y-axis is the SPX strikes. We know that green bars are positive gamma. Lime green is the open interest on GEX. Red bars, negative gamma, same breakdown. The pink dots, there's dots on here that go with the recent GEX movement over the last 30 minutes. And you all can see up here, these dots up in this top corner, we have a legend that tells us what's happened 1 minute prior, 5 minutes, 10 minutes, 15, 30 minutes, right? The dashed lines are right here in the middle. They show key gamma levels, 0 major positive and negative gamma. And then the blue line is the current price of the SPX. That's what all is happening in this little chart here. Magnet versus repeller, what's the deal? Let's bust the myth. The green or positive gamma are price magnets most of the time. So the green is price magnets most of the time. Market makers buy when the price drops and sell when it rises. This hedging behavior creates inward pressure like gravity, pulling price towards the level. These areas often trap the price and act like a pin zone, especially close to expiration. So these are like traps and pins. The red negative gamma zones are like wild cards though. Market makers buy as price rises and sell as it falls, which amplifies the move. These zones don't repel price directly. Instead, they create momentum zones where price can blast through. If a red zone gets triggered with volume, it can ignite strong trends. So the red doesn't repel, it accelerates. Think of the red zones as slippery slopes, not brick walls. Okay, so this is the key here that's important. We're thinking of the red zones as slippery slopes, not brick walls. I put that in the page, that document I put in our Telegram, I put that in there. Basically, if price starts to slide down to here, when it hits these trigger points, they basically cause it to go even more. Like it slips off there. Oh, we're down here. If it gets triggered, then it's gonna keep going. Which is why sometimes we'll see price move to a spot that we thought was gonna be a place, it was gonna be a hold, and it just drops even harder. And you're like, where are you going? Yes, that's what that is. Okay. So if the red doesn't repel, it accelerates. Think of red zones as slippery slopes, not brick walls. All righty, so they're not, red is not really support. Again, it's like a slippery slope. All right, so that's that. I think that's good information that we kind of didn't have before. I didn't have before anyway. It wasn't clear. All right, so let's keep moving. How to use this chart for strikes. Trade near the greenest bar. Positive gamma peak acts like a magnet or pinning area, ideal for iron condors, like we just already talked about this, right? Avoid selling spreads directly in deep red zones, especially 6,000, which was the major negative gamma zone. This is the 6,000 right here. Not sure if y'all can see that. This line here, because this is small. This number here, this big red is 6,000. That's where that was. It says, especially avoid selling spreads directly in the deep red zone, especially 6,000, which was the major negative. If SPX gets near this, things can get violent fast. Use red zones as momentum triggers, not spread targets. Okay, where the green can be used as a target, the red, no. Use the gamma flip or zero gamma, which was in the middle. 5624 was somewhere where the zero gamma, where is our zero? Was this line up here? 5624 was right in here. Zero gamma is this one. Let me get my little pencil so y'all will know. This is the zero gamma. That's the zero right there. And the major positive is here. This is the plus, and the major negative, nope, the major positive is here, not there. That's the major positive, and this was the major negative. Basically, the big line that's green is the positive, and the big line that's red is the major negative. That's basically how that goes, okay? Where's I? Okay. Above is calm, below is chaos at the zero. This is the gamma flip is the zero. Above it is calm, below it is chaos. If SPX drops below 5625, then consider switching to directional plays. If it goes below the zero, then we're looking at more directional. What for us will be called credit spreads, because we're down here in the red zone. If it climbs back above it, then condors become safe again. Okay, which means then you can put your put credit spread on after it climbs back up here. Add the bonus sauce with the recent pink dot movement. So the pink dots are the ones that are on these lines, and on these edges, you see these little pink dots. Lots of recent pinks around 5660, 5670, and 5680. So those recent pink dots showed up recently, because when we got the brighter or the more pinker showed up at the 56, like up in this area. You saw more pink dots showing up. Fresh dealer activity, which is the attention zone, lets you know that they're starting to get some attention up in that green area. This is where new hedging pressure was forming, can be good zones for call side credit spreads, because now there's people hanging out in that area. You can look at your call credit spreads up there. Okay, we've got they got a little piece of information. Okay, where's my pencil? There we go. We can erase some stuff that's in the way. I put this little chart in our thingy too. So red bars and areas are like magnets, which he had already said that. Not exactly. That's where a lot of folks get tripped up. Let me break it down clearly and cleanly. Red bars, no, they're not magnets. They're momentum zones, not price attractors. Let me put this back at the 0. There we go. Put that back where it was. Green zones, red zones. We talked about that. Slippery slopes, how to think about it visually. Add these to my PDF. Red ramps. Okay, I'll make sure we got the pink dots. Talked about that's more recent activities is where those pink dots are. New interest is building. Okay, let me make sure because there's a little bit more. I had a couple more questions that I asked him. Okay. So I'm looking to use this data along with other things to place my credit spread trades. It seems that SPX can be so volatile, but you suggested looking to place daily trades around 1030. Is it a high probability that my credit spreads can successfully go to expiration with these steps? Chad says you're asking $1 million question. I love that you're thinking in probabilities and precision. Let's break it down. Can these gamma steps help with the 0 DTE credit spreads? Short answer is yes. They can significantly improve your probability of success if you combine them with smart timing, structure, and exit management. But it's not a guarantee, just a probability enhancer, not a holy grail. Why 10 to 1030 is a sweet spot? By this time, you got your stuff is there. Basically, initial market volatility is calming by 1030. Gamma exposure data is here. You got market makers have started positioning. You can decide whether it's a condor day or a trend day. Help you avoid the whipsaw of the open. But you can increase your probability by choosing strikes in the green zones, looking at your pink dots, picking wide enough spreads. But here's the real sauce. Here we go. When we partner this with chart levels, we already talk about our charts, VWAP, prior day, and the VWAP prior day high and low. That's when we want to make sure that we always talk about that, putting our 6 lines on our prior day high and low. Y'all like, why are we doing that? I didn't know for this, but now we're doing it. We know we can use it, right? And VWAP, we've been using VWAP anyway. The volume profile, we can use that. We don't really use volume a lot in here, but we can incorporate that because volume is figured into the Magic 8-ball algorithm. So that volume is taken into account, and so is open interest. And is it a trend day or a range day? Now we're stacking the odds in our favor. We're no longer guessing, okay? So he says here, if you're doing gamma plus structure-based spreads, then you got a 70 to 85% probability of profit. If you do the same setup in the red zone, you basically diminish yourself down to 40 and 60. Basically, don't try to do iron condors or redder in the red. And if we do gamma plus the pink dots plus volume plus our price action, then we got a 85+% chance, especially if we look to exit before close. Now, what does exit before close mean for us? How can we exit before close? What do we use to exit before close? Anybody who's still listening to me drone on?
The PDT hack.
Yes, there we go. We incorporate our PDT hack to help us get out of some of these before we get too late in the day. right? That's gonna give us our highest edge when we layer these things together. Our gamma, where is the highest activity? Volume, which is already tied into because Chad is not talking to me about Magic 8 Ball. He's talking to me about using gamma. So Chad doesn't have a clue that we're using Magic 8 Ball. That's figuring in open interest and volume and all those things that help give us strikes. Once we know these things, and we're looking at price action, so we're looking at our charts anyway. And Magic 8 Ball is also figuring in price action. So we're just looking at how do we read and understand gamma for ourselves. All right. All right. We're almost done. I think I'm almost to the end of what I have figured up, what my conversation with Chad. Okay, final tip. You don't always need to hold to expiration. Even exiting around 1:30 or 2:30 when theta ramps can lock in 70-90% of your premiums with less risk. So yes, the gamma strategy gives you a legit edge. Use it to filter the noise, position with intention, and let time decay do its thing. Okay. I talked about where to find gamma. You can add gamma to your option chain. Even when you add it on your option chain, I'd like to see how gamma looks on the option chain when the market is open, because right now it looks like a bunch of decimal places, and it's not. At this point, when the market is closed, it doesn't seem to be a useful piece of information. This data we have over here is much more useful. But you can add gamma to your option chain. Just like we add delta and we add probability out of the money, or whatever else, we can also add gamma. It's one of the things we can add. Okay, it's one of the Greeks. And it tells you seems like all of the platforms added. TradingView is not really a platform, but there's ways to see. There may be a thing, even on TradingView, there may be a gamma indicator maybe there. There's using free gamma exposure tools for the broader view. I don't know if you all wanted to see. There's Spot Gamma, seems to have a free version. I don't think I incorporated these. Let me copy the link if somebody wanted to be able to see gamma more readily. I've not ever looked at it, but I think the chart, if you're going to use that, definitely you'll look at how do you understand it. Tier 1 Alpha, Trady Ticks, I've heard of them. They have a gamma dashboard, says good if you want chart overlays, and Quick Strike by CME. For those who really are into gamma or that were looking into doing butterflies, you probably were looking at gamma a little bit there. From the option chain. So what can you do with it? I talked about why the gamma numbers were so small. And positive number gamma on the option chain. Okay, let me see. I think I'm about done with this conversation. Okay, this next piece was when I gave you all this, when I said these were the 3 images, and I asked, this was from Friday, and I asked chat how I could have used the 1025 image for the day's trading, and I gave you all this in the chat, so I won't go through all this, but it does talk about how we could have traded it on Friday, how we could have looked at and placed our trades for Friday. And then I did ask the question about, at the end of the day, that was my last question about, it kept showing that 5670 or 56, whatever number that was at the end of the day. And I asked a question about worrying about it at the end. Let me get down to that. Okay. One thing I worry about during the trading day, like Friday, is that the price is pinning near 5,700, but in late day, it would drop quickly down to the 5670. The 5670 was that red bar that stayed over to the left, which it did, you kind of dropped down to that, right? He said, that's a valid concern. Your instincts are sharp. Thank you. The late day SPX slippage or rip is real, which I think this is good information for us because we're always wondering what happens at 3:45 and why it goes nuts at that late in the day, right? Let's break down what's happening and how to protect your credit spreads from it. Why price pins and then drops like 5,700 to 5,670. The dealer hedging shifts. That's the first thing that happens. Early in the day, positive gamma dominates. Dealers suppress movement by hedging against the price. As the day wears on, though, especially after 2:30, zero DTE gamma starts to decay rapidly. This reduces the pinning pressure and the dealers stop absorbing moves. So basically the pinning where it was pinned at the end of the day, where it was pinned all day at that 5,700 level, after 2:30, that whole stickiness or that magnet, the magnet starts to get weak, basically is what they're saying. So huge open interest at round numbers like 5,700 acts like a magnet, keeping price there until gamma decays. Once gamma collapses, the price can drift or flush, especially if institutions want to rebalance or clean up their hedges. So at the end of the day, the major institutions are trying to balance what their things are going. Profit taking or position unwinding. Traders who sold call spreads near the top may close them late in the day. That order flow can add downside pressure suddenly. Okay, how to protect yourself from the late day drops. Don't be greedy with expiration. If your iron condor is sitting pretty around 1:30 or 2 o'clock, then take your profits. Don't try to squeeze every penny. Gamma decay flattens and risk rises. Watch for gamma drop on the GEX charts. If total gamma starts falling off a cliff after lunch, increased risk of a price drift or flush. That's going to lead to increased price, drift or flush. Rising gamma is safe. Falling gamma, you need to get defensive. This is interesting piece. I don't know if I put this in our information. I have to go look and see. Rising gamma is safe. Falling gamma, we should get defensive. Check VWAP before holding to close. If SPX is drifting below VWAP in the afternoon while gamma is dropping, there's a higher risk of a fade or a flush, basically. That's often a signal to trim or to hedge your put side. Use alerts at the flip or the point of control level. Set your price alerts at zones like 56, 70, or 80 to warn. If it breaks this key support, that gives you a heads up to cut or adjust before the drop gets ugly. So basically at that flipping point, you can put the alert there that says if it gets past this flipping point, then I need to go ahead and close up my shop and be on my way. Okay. Chad's Friday rule of thumb, which is for us could be any day, but Friday. If you're up 80% on your credit spread by 2 p.m. and gamma is declining, close it and enjoy your weekend. You already won. Don't let SPX Moody late day twist erase a good trade. Then we were talking, I asked some questions about volume and VA, what that means. It was about the volume, not volume area, value area for the volume. And I think that might have been the extent of our conversation. If you can treat these levels as dynamic support resistance zones. When combined with VWAP, price action, and your gamma checklist, you get a clean layered system to base your strikes around. Yeah, okay. I have run it all the way through. Do we have questions?
Yes.
Mm-hmm.
Somewhere up in here, you said something about a 6,000 level, and I couldn't understand what the 6,000 was since that was not a price option.
6,000 had something to do with the picture I had attached.
Yeah, it was something about the red zone.
Mm-hmm.
But that number 6,000 really threw me. I didn't understand what that was representing.
I go back to where we were on the 6,000. pertained to something in here. Oh, the 6,000 was on a different chart. Let me go out of this one. It was on one of those different.
Oh, yeah, that's why I got confused too, because where you pointed it, I thought that was 5,600.
Yeah.
So I was wondering if they were just
Mhm.
not talking about the chart altogether, but just how 6,000, SPX 6,000 is just a major gamma wall, just altogether.
I think I had shown a different chart, and in that chart, 6,000 was on it. So let me go find it again.
It was definitely the chart you just
It was that same
had.
chart?
Yes, ma'am, because you wrote 6,000 on there, and I'm like, that's 5625 or
Yeah, yeah, yeah. Let me
5650.
see.
So what is the 6,000 referring to? But it was something that Chad said. It's so weird calling it Chad, but
Okay,
it was something that Chad said. This it,
I
right?
think
Like,
we're
what
here,
is
yeah.
this 6,000? That was it.
Yeah, I see that. I'm trying to see what it says below, above that. That might have been the 5,600, yeah. Especially 6,000, the major negative zone. Okay, yep. I agree. That
So
was
that was
most,
probably just a typo with
yeah,
okay.
because Chad's looking at it at the graphic as well. Let me see.
Okay, I just needed to confirm that. The rest of it made sense, but numbers stick in my
Yes, it
head.
was right here.
Okay. Okay,
Yep.
so it should have been
5,600 is where
5,600.
that needed to
Okay,
be. Yep, 6,000 wasn't there. Yep,
thank
gotcha.
you.
Yep. Thanks for bringing it up. Uh-huh. Mm-hmm. Yep, there it is. The major negative. This should have been 5,600. Questions? Any more? So now, is Mr. Mack on here? We'll have to make sure that he watches and listens to this video, because he had asked. So can we do a playback of Friday's chart analysis and use the information we just gathered from ChatGPT to see if it's consistent with everything that was said? Yep.
Well, I appreciate you doing that. That was awesome. It makes sense now why Brian does his 10 o'clock call. I think clearly he has some thoughtful insight. And also it um it takes away from thinking that in the red was safe.
Yeah.
It's no longer safe.
No.
I think we thought about it as being below, but
Yep.
that's where the volatility is. So
Yep.
that was good
Exactly.
to,
I thought that was if
yeah.
nothing else was good, all of it was good, but that was
Yeah,
good.
it made sense. Thank you.
Yeah, yeah, and to understand that bottom line chart too was good, because I was wondering what was that bottom chart, telling. That was good too.
So the maker of the 8 ball, he usually trades at the 10 o'clock time.
Somewhere between 10 and 10:30, his trade he seemed to
Yeah,
be entering
yeah.
about 10:20, well, not 10 o'clock. Seems like it's
10:30-ish
10:20, 10:25, somewhere in
or
10:30. He's
10:15.
entering
Yeah. Mhm.
after 10:15 sometime, it seems.
Okay.
But yeah, he's not 10 o'clock. He's not entering as early as that. And he also has his profit target set that it's set that he's going to enter, and then
And
it's
he
going
gets
to
out.
close, and
He
he's
will get out. He's not PDT hacking it. He will get out. And that what you broke down before 2 o'clock makes perfect sense why he gets out. Some people
Mhm,
will get out. Not everybody can do a PDT hack or
mhm,
whatever their situation is. So that made sense too. So this definitely had a lot of confirmation. So
mhm.
thank you.
So this is Friday, right? So if we were to start Friday, and let me see, I can also get us, where is you? Where is you? Let's go back to where we're looking at the same time. Magic 8 Ball. We'll stick to this one. Friday, and we'll go on up to first thing in the morning, let's say 10 or so. What's this, 10:55? Yeah, let's go to maybe 10:15, 10:20. Okay. So I'll bring this over so we can only see what happened as it goes. We won't be able to see all the stuff yet. Okay, I'm on the 15-minute chart. And this is Friday on the right. Okay, 10 on the left, this is 10:20. This is 10:20 right here on this chart. Magic 8 Ball has given us numbers, and Magic 8 Ball gave put credit spreads all day on Friday. It might have flipped a little bit a couple times, like early in the morning. I think it flipped once, but it gave put credit spreads all day. So 10:20. If we're looking at this gamma chart, we see that the big pinning place, if you want to call it that, this would be 5,700. So 5,700 would have been what would be called the magnet. And the lower big one would be 5625 is what this is. This larger one here is 5625 down here, right? Big one at 5,700. So according to what would have been a good thing to do, potentially from what ChatGPT was saying, was to go outside of this range, which would have been to go up outside of the greens, to look for a call credit spread up here where this is starting to wane off. So maybe 57, sorry, 57.35. 57.40, something like that, if you wanted to do an iron condor. Now we're in positive because when we talked about the green being we're in the green and we're in a positive, and you're in positive gamma area. Positive gamma area, and you're in the green, says that it's going to try to stay up in here. This is a more stable area, should stay in the green, right? So above the higher part and below the tripping place or the lower, which this drop off, pick back up, I don't know about that. But so let's say this is 56.50 or below. So 50, maybe you go a little lower, 56.40. Now, given what we know about SPX expired, what, 56.86? We know now on the backside that this trade would have expired worthless. Price moved a bit, but we do know now that this is the ending price was 56.86. Time just would have decayed. So at 10 something, if you had gotten this trade, I'm not sure what kind of money would have been at 57.35, because current price at the time at 10:20 in the morning, current price is at 56. This current price is what, 56.71. So I'm not sure what kind of money would be up here, but if you knew that those were the strikes you were looking at, you could wait till price climbed a little bit and then enter it and just go with maybe the put credit spreads that were being called. But that's neither here nor there. But this was the trade that, based on the thoughts that if it's positive gamma, you got a big pinning place, we're in the green, the thought is that it's stable and should stay up here, right? So price climbed, we're here at price dancing around basically in this candle. 56.76, it comes down 56.64. Then now this is where I got a little nervous. Some of us entered, I think TJ or some people entered around the 10:30, might have been TJ's, I don't know if anybody else did, entered, and then TJ's PDT hack actually set in this area.
Yes, ma'am, it did. Uh-huh.
Yep. So then you still up here 56.96. I had 5,700 and was super nervous, but if you had 57.35, it never got above that. So this would have been a good time. If you knew you wanted to get above the fray here, then this would have been time to set this above the fray area. I'm gonna go off of this and let's go down later in time to see if this is what, 12 o'clock? So if you're looking at the 12 o'clock-ish time, if you were still looking at your gamma, now we're at 12:05. This is the 12:05. Still, the outer edge of this is still 57.40, 57.35, 57.40 is still the outer edge. So you could have waited till price got up a little bit higher. This says 12 o'clock. Let me see, what time is price up here? Oh, price is up here a little bit later. Let me go forward one or two more, because I want price to be closer to this pinned area. There we go. Maybe let's look at this one. Still got, prices outside of the range. And here, 57.35, you would have gotten better premiums up here because your price is closer to it. And price is just kind of dancing up here a little bit. This is the 12:05 gamma chart. Positive gamma, 5,200. Before it was like 11 something, right? So now we're still in positive gamma. Price is near the pinning place, so it's up here and kind of hovering. It dropped down, but you saw how price, after it got up in here in the 5,700 area, it's tended to stay up here. I'll put a line at the 5,700. But once price got up to 5,700, it stayed up here. Oh, I didn't want another line. Thank you. Okay. It just kind of hovered, touch, because it's pinned up here now. We're talking about 230. So we can look at the gamma chart at 230-ish. Y'all see, even though I'm scrolling down, the big pinning place, if you call it that, is still stuck there. People who do butterflies were in love with a day like Friday because they love it when it does that. This is 230. This is 230 over here and 230 over here. Price is still in the same 5,700 area. Right? We're moving forward. Price pulls back a little bit. Now we're down in the 56.86. So this is like toward the end of the day. Even though we had a pretty big drop at 245, it started to drop a bit. Let's see what the gamma chart looks like at 245 when it started to fall. This is 245. Gamma still 11,000. Oh, that's the same chart. This is the 250 chart. Gamma is now dropping because gamma is now 5,000. It was at 11,000. So gamma is like half. It's now decreasing. This was where ChatGPT was just saying, if gamma starts to fall off, in the afternoon, gamma start to fall off. We went from 11,000 to 5,000 in a 5-minute window. That may be indication that price is fading because we've now dropped 5,000 or 6,000 in the gamma area. And we're also now at the tripping place or flipping place, whichever you call it. We're right here at the line where we flip from positive to negative. This is at 245. Yep, 245. Right in here. Okay. $3 o'clock, 3:55, 2:55, it starts to go back up a little bit. It just goes, you see the red line. I'm not sure if y'all can see that depending on how you're looking at it on your phone. Here we go at 3:05. 3:05 is in this area. It's right at the flipping place. This is where we would have our alert, even though we will be watching. Our alert is, now we're at positive gamma still, but it's at 4,000 now. We were at 11, then we're at 5, now we're at 4,000. So the gamma is decreasing. So the pinning power, the power of the pin, it's losing its power. 4,800 gamma, Gamma jumped back up to 9,000. Gamma's now at 9,000 at 320. And the price climbed up a little bit. Gamma's at 11,000, 11,000, 10,000. It's still holding up there, 12,000. Price is pulling back up to the 5,700. Here we go. At 350, Gamma drops to negative 1,200. 350, we right in here, which is where we see this big drop happens. The Gamma also happens, and we're now over into the negative. We're over the flipping place, and we're now over into the negative. Price is at 56.86. Now, if we were doing an iron condor, we're at 56.40 or whatever we would have had from Magic 8 Ball, because Magic 8 Ball would have had suggested prices over there before. Oh, but let's look something else. I didn't even look at this and comment on it, but look at the bottom. See how our we could be using that even if we're not keeping track of the numbers at the top. See how our Gamma was climbing, and just before 3 o'clock, Gamma start falling off. Let us know that our Gamma is decreasing. It did climb back up a little bit, and then it fell off real bad at the end. Fell off real bad at 350. Could give us some indication that, you know, that if this is fading at this end here, that there probably would be a drop at the end.
I don't know though, because that last drop, I don't think we saw that in the other chart. It just looks like it's trending back up,
What other chart?
the other former ones,
The one,
the other gammas.
this one?
Yeah, all of them.
We didn't see this down here?
So right here, yes, it's starting to down, but I don't know if we would have seen that drop down.
Mm-hmm.
One, I wasn't looking for it.
Yes,
Because it rolled up. Because it rolled up after that. And the other part, which is, I guess, just like a coincidental, 5,700 is also the psychological wall. So that's
Right.
why
Right.
this, you know, but I will definitely pay attention to that.
So
more.
I'm looking here now that we're here, I'm gonna scroll us through this. But when we're looking here at the bottom, let's look at the bottom chart now. You see this blue, like it's been climbing. This is 245, and then at 250, see how it drops off right here? That may be something to let us know that it's the Gamma starting to fall off. It does fall, it does climb back up again. I'm looking at the bottom line now. Climbs back up, some falls a little bit, climbs back up some more, falls some more. Then it runs back up, runs up, and then it gets back up to where it was at the high place. Almost like you can chart it like a sell zone. And then when it gets back up there again, it falls off again. And then this is 345. When it gets back up to that high place on the total GEX, when it gets back to the high point, the next chart, 350, this fall off here, maybe 350, that's in the time when we're like right at the end of our last 15 minutes and we're looking to see what is it gonna do, yada, yada. That this may be indication for us that says, okay, based on what we're looking at.
Is this a daily chart?
Is what a daily chart. This happens all day. It happens every 5 minutes.
Oh, so I'm looking at 5 minutes data here.
Yes, 5 minutes. This comes out every 5 minutes inside of Magic 8 Ball. It comes out every 5 minutes. See the times here, 345 and then 350. This comes every 5 minutes. And then you've got 355. And then we got 4 o'clock. So now we at least know we got something else we can look at as an indication as to what the price may do. Like when we're in them last 10 minutes or so, But many times we're looking for entries. Sometimes we're looking for entries in that last 10-minute window. If we can see this right here, if we see something like this at 350, something like this at 350, then we know we can pick, you can pick a call credit spread strike and be fine for, going into the close. And that's gonna give you a little more confidence. I don't say, nothing's ever 100%. But as was said in Magic 8 Ball, once you get to, not Magic 8 Ball, ChatGPT, once we get into the red, this becomes the slippery slope. Once we get into the red, it's going, that's, going down that way. We're no longer pinning up here at the green because we've now lost our pin. Once we cross over, we're no longer pinning up there. We're more like going, we sliding off the slope after that.
So you saying at 350, you're looking at that tall bar, and I can't see those numbers, but you're looking at that tall green bar to say, okay, I'm going to get on the right side of that tall green bar and maybe do a CCS.
Well,
Because you
honestly,
don't think that,
you could probably get, if it's once you get below that green bar, like this is earlier in the day, the 5,700, here we are, is the green bar, right? Once
yes,
it gets below that, the 5,700 is the green bar. So it's not gonna go, once it starts to slip, it's probably gonna slip on down below that. So then the green bar can be your place, or anything that or above that can be your place, because it's not gonna go past there for sure, especially not if gamma starts to decrease. What I'd like to see is what happens on those days when it runs up crazy. We have to go back to a day when it runs up. I have to do that when we're not on this call so I can analyze it. But I'd like to see what does this all do on those days when it runs up? What was that like? Was it Wednesday? Maybe we can scroll back. Maybe
April
Wednesday?
30th. April, I
April
think that was
30th?
Wednesday.
Yeah,
Yeah,
that
we
was
had a run
Wednesday
up
that it
to the
ran up real
close.
crazy. I want to see what this looks like on a day like that. But yeah, so you see here, Mr. Mack, that once it fell down from the 5,700 and the gamma starts to fall down too, then it never went back up there again.
yeah,
Mm-hmm.
yeah. I was looking at the bottom bar as high as it went. It still never got above the
Right.
tall green bar, no matter what
Exactly.
happened.
Yeah, the green bar, from what we've talked about, is that it's the pinning place. Basically, it's
Yes.
the magnet and the pin, and then besides that, it's gonna go the other way. And if you wanted to place a trade earlier, which we talked about, get on the other side of it and get some credit spread over here outside of where gamma's falling off, and then go with that through the day.
Can you find that day that you was just discussing?
Wednesday. Yeah, let's go back, see if we can find Wednesday, because I'm interested to see what the end of Wednesday looked like on this chart.
I think on Wednesday, all those bars were short.
Oh. Yeah, and then it just did one just pop out of nowhere? Did we just come out of left field on us? Okay,
Yeah.
here is 4:30.
The range
we
was
go.
very tight all day until 3:30, and then
Yeah.
it ran 80 points.
Yes, crazy. Okay, so this is Wednesday. This is Wednesday at 12:35 right here. So this is it's kind of just hovering. Both sides look kind of balanced all day long. It's like a little more green than red. This is all the 30th, right? It was the 30th that's the day that it ran through us. Was it third? Was it
It was
that
the
day? Or was
30th.
it Monday?
Can you show us a chart too, ma'am?
Man, somehow I
That was a
feel
good
like,
example when I see the chart and that.
I'm trying to remember too. Somehow I remember something. What happened on Monday? Y'all remember? Maybe Monday was where it dropped and never recovered. I don't even remember now. Maybe I need to forget it. Don't even go back to it in my memory. Okay, let me go back to where we are. The 30th. This is the 30th here. See where we are. Where's the price on the 30th?
Wasn't it whatever day that they had earnings for Meta?
Yep. What's that? 55? I think that's a 5. Is that a 5? Oh, there's the prices. Okay, here we go. Yeah, Meta was on Wednesday. Okay, so we're looking at 1240. Okay, so I got 1240 over on the left. This is 1240. So the big bar here, the big place or the big gamma over here is 5550. That's the big number over here. 5550 is the big green number. Now the thought was that their thought is you could get outside of both of these, that you could trade and see. Let's see if we're looking at it from this side, that will work for us. If we went outside over here, then that would be what our 5600 would be on the top side of that. And the bottom side of this would put us at like 5470, something like that. Okay. Yepper. Okay. You're looking at being outside of the green. We're at positive. Okay, this is our testing the theory. We're at positive gamma, right? We're in the green. The magnet should be the big one, right? So it should pull in here to these big ones, whether this one or this one, it should pull up to those. So let's see if the 5600, which that 5600 looks kind of hard to read. So let's see if we can write it so it's clear for all the people to see. This is 5600. Okay. All right. So let's go. Looking at our chart. 1 o'clock. We went up as high as here. This was 5546. Is this high place right here? 5546. And that is at 2 o'clock. So I'm going to keep scrolling. Keep scrolling. The red line there in the middle is where we're kind of pulling. So here we go at, what time is this? 1:15, which is here. Price drops down to the flipping place or the tripping place. It drops right down into there. Right? Y'all, hope y'all can see this. Our little line at the bottom going up, it pulled back, it went up again and pulled back again. Then, even though we were at the flipping place, it went back positive. Climbing. Going up, it went to the first high bar, which that first high bar is 5520. Yep, that first high bar is 5520, which I think we were at 55, right around, I think we were at 5520, weren't we? Somehow that number seems to be sticking in my head. 5520, it went on through there. Went through there, 5520. It's pinned there for a little while. Got past it. Pinned back to it. What time we at now? This is 155, so we're right around in here now. 155. Still climbing up. I'm climbing up. Drifting back to the 5520. Now the 5520 is no longer a big bar anymore. Notice it's a big bar here, but on the next chart, that big bar is no longer as big. It becomes equal to that other one. Okay, it's still kind of dancing around in there though. What time we at now? We're at 235. 235 is around in here where this shooter is. That 5550 though is still staying as the big bar. But this one here, this 5520 has now become equal to the 5550. These two bars are almost equal. So this, I think, is going to pull it again. 5520. Where are we at in time? There we go. This is 245. 245 is here. And it is, current price is around 5511. Yep, right around in here, 5511. Price starts moving. It looks on here like it's sitting still, don't it? Look like the price is staying 305. 305 is in here. Maybe because I don't have it on the 5-minute chart. I have it on the 15-minute. And this is on every 5-minute. Climbing, climbing. Let's see what happens at 325. 325 is right over in here when it starts to get on a horse. Now, y'all keep looking at the blue line at the bottom too. Because the blue line at the bottom is still doing its stuff, doing its moving up. Our gamma is at 7,000. At 325, at 330, it's at 5,200. Two big lines there. At 330, we've got 5220 and 5230, 55, sorry, 5520 and 5530 are the big bars. 5520 and 5530 are the big bars. But there's another one out here. This is still 5550, which I wrote this on our thing. 5550 is still hanging out here. Okay, this is big bar 5550 still there. $55.50, it's still going, it's climbed to it. It went a little past, well, did it go past it or did this one? Oh yeah, it did. Let's see. I need to go back now, go back one because it jumped right on past there. Okay, so this is, let's go back one more because at this particular one, we're at the line here is at 55.45. The line is 55.45. We can see it right here. And 55.50 is the big one. We've got the gamma down here. See our line? It's got a nice little strong right here. 13,000 is the gamma. Okay, so now I want to see something of what y'all look to. What do you see, or do you see something that indicates the jump that happens next? Because now we're at 55.69 and this down here still looking the same. All we've done is jump the price. 55.50 is now down here. Gamma is still about the same. This 55.50 over here. This is 55.50 now. I don't see anything that would give, I didn't see anything that would give indication that it was going to do that, except for the fact that this is all in the high zone. And what we would have done was gotten the 5,600 from earlier in the day, because we would have gotten outside of it anyway. If we were going to look to get above all the green, we would have gone beyond all the green, or at least the majority of the green, and gotten something up here anyway. We wouldn't have even been in there. Now, you probably would have waited for 5,600 till the price got up there, because if you'd done it too early, it wouldn't have been any money. Juana said that's what I did, but not that far up. I played 57.05 and 10. Oh, that was Friday. Yep, I did. I had 5,700, but I got scared after it breached to 5,700. I got nervous. Okay, so this was, let me go back to where we can see the chart too.
I guess after 345, since there's no, since the red area, the negative gamma greatly decreased, instead of us thinking it could fall back, because that Wednesday, it just pushed up.
Yeah.
It just pushed up. I guess the indicator for us is it's going to stay up.
Right. If there's no
Where,
more green,
right,
then it's gonna keep going,
it's
right?
just gonna keep going up.
Yeah.
And it did, because
And it
that's
did.
where we were blown away. It
And
was
it
like,
and
where
it did.
and
And
it
it
did.
did. Yeah.
But
It
okay.
did.
Yeah, interesting. And gamma increased significantly. I mean, for the middle of the day, for the majority of the day, it was below 5,000. That spike from 14 to 17 is amazing. I never noticed that paying attention to this.
Okay, so now let's look at this chart and think, what would we, if we were looking at this chart here, this was Thursday, we know what happened on Thursday, but if we were looking at this chart for Thursday, what kind of trade could you see yourself doing that Thursday that just passed? Based on all the stuff I don't talked about for the last hour and a half. This is 10:30. This is the information you have at 10:30. Positive.
If I didn't think,
Go
if
ahead,
I
Mr.
didn't
Mack.
think price was gonna go down, because I see the smaller red bars, but I see a lot more greener bars. I'm thinking I'm gonna do a good credit spread, because price would perhaps keep moving upward.
Where do you think you would think for strikes?
I would have looked at the premium. Now, see, I'm thinking, because we always go with 95, maybe 90 cents, I'm going to look for the strikes that would give me 90 cents, maybe $1.
Okay.
And that's only because of Magic 8 Ball that it has conditioned me to look for that. And perhaps, especially if I'm going to do, without Magic 8 Ball now, I'm doing this on my own.
Yeah.
I'm definitely going to do a PDT hack.
Okay. 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 Based on the red candles, what you think would be a safe place if you didn't have Magic 8 Ball strikes? What do you think would be a safe place to put your sale leg? Anybody, not just Mr. Mack. Anybody.
I would have said like 55, 95, 5,600.
Yep, right below
Okay.
this.
Yeah, I mean, I might have wanted to go more conservative, but I don't think there would be any money in it.
Right.
But
So,
below the flip zone.
So below that flip zone, somewhere down here. I'm with Mr. Mack though. I'd want $90, $95 if I could get it. 5,600. What will we do for our call credit spread side?
If you can get money, because at that point we would want to be so far out, you know?
Well, you want to see where gamma's starting to peter out. So now we know 5,700 is gonna play resistance. So because of its psychological area, so you really could get. Now, mind you, we're early enough in the day, which is another plus for looking at 10 and 10:30. We're early enough in the day to where there will be some premiums up here. Or you can see where you want premiums, where you want your strikes to be, and you can, set it to say, okay, I'll enter this when the price gets here. Remember, we don't have to do our iron condors all at the same time. You can say, I'm gonna let price do its climbing. If it's gonna do some climbing, let it get up here and pin up here in this 56. So this is 56.50, which is only 50 points away from here. That's not like it's really far away. Let it get up there, that's only 10 more points, and then place your 5,700 or whatever, knowing, but earlier in the day, you're going to get better premiums. The earlier you are, 10:30 is still a good time. You say, what strike price you like, or 57.05, whatever it is you're going to pick, but you know what strike price you want, and you know what kind of premiums you'd like to have, put in the order and watch till it pick up. So if we look at that, where did Thursday expiration? Where did we expire on Thursday? We would have gone 5,600 to 5,700 based on what we know only about gamma, even if we didn't have magic 8-ball, which we do, right? But what would have been our expiration? What was our expiration on Thursday? You know, we got a couple things that are working with us. We got some help.
Oh, yeah, but there's a couple other things that, I mean, when I said that, didn't consider, is that we gapped up on Thursday because of earnings and
Well, I
no,
gave you this information this is a gamma chart that was from Thursday.
right, but what I was saying, I wasn't looking at the chart to see that they gapped up, and I said the 55.95, the 5,600, I would have tried to get below the gap. That's for me, because I'm
Oh,
thinking
okay, I get you. Okay,
it's gonna,
I got what
it's
you're
gonna
saying.
fill that gap, which I think it did try to do.
Yeah.
Let's see, where are we, May? Thursday, we closed on Thursday is this Thursday or Friday? Is this Thursday? May 1st, yeah. It closed on Thursday at 5604. So if we were here at that 55.95, 5,600, we'd
Been
have been
knuckle
close.
biting. Would been knuckle biting. Yeah.
We would have been knuckle biting, but we would have been in there. We'd have been in there like swimwear, they say. But so let's look again, because I want us to also be to maybe we say, okay, that's just below this big, you know, somewhat big one. Perhaps we would have gone a little bit deeper into the red zone. So we would have given ourselves a little more of a buffer, because this did put us, if we went with 5,600, that would have put us very close to a psychological place, which we know that's a thing, right? And it also would have put us real close to the flipping place. So maybe we would have gone 55, 90, 95. Maybe we went down in this area and a little bit further. We went down a little bit deep, maybe went down into here, because we wouldn't want to be as close to the flipping place. We want to give ourselves a little bit more room. So maybe we would have done 55, 85, 90 or something like that. I mean, basically we're talking about what we would do in real time, which we would have been given. We can probably go back. Let me go, because we can go look on Thursday morning to see what kind of, at 10:30, what was the suggested trade at 10:30 on Thursday morning.
Can I
Go
just
ahead.
ask a
Yeah,
question
go
when
ahead
you
while
look
I
at that?
go look back. Go ahead.
I don't know if you or Janae said earlier that you just that the maker of 8-ball, he sets his strikes and he gets out early?
He does a PDT hack, but he sets at 10:30. He works a job. Well, I say works a job, whatever he does. He opens his trade at 10:30 in that time frame, and then he sets a close order to close or stop loss. His close order is, if it stops out, he leaves it, and if it he takes profit, one or the other. He sets it to close though.
I think he also does at the money strikes. I think he has his journal. I don't know if he does that all the time, but he has a journal.
Yeah, he does have a journal page in there. He does do something or other. Yeah.
So yeah, he always, but he does PDT hacking.
Mhm. Yeah, he does PDT hack it.
Yeah.
You were asking that question for what, Mr. Wesley?
Well, I was thinking that if the gamma seeming to be not going the way I want it, to go ahead and just cash out.
Yeah,
Go ahead, take my little profits and walk away,
yeah.
because I don't like the way the gamma is looking.
Yeah. One of the things I talked about a little bit earlier was ChatGPT suggested if you're at 2:00, 2:30, and you've gotten the majority of your profits, to go ahead and close. We don't have to sit through the volatility of the 3 to 4 o'clock. We don't have to sit through that. If you got, use your PDT hack or go ahead and close it out. However it is, if you got, the ability to do that, set your PDT hacks and close it. That's going to increase our win rates and increase because that last 15 minutes, we already know Now, if you're getting in early enough, you probably got enough room where you don't have to worry about it as much, but it's just still needing to be in and exposed. And
Yeah.
if you can PDT hack it and be gone, then you're in good, then go ahead and do that. Oh, we're on I wanted to look at Thursday, which was the first, right?
Yeah.
And I wanted to look at, what time did I say I wanted to look at? 10:30. What time at 10:30
Yeah.
to see what kind of trade, what was the strikes that was suggested at 10:30. I was about to blow right past it. I scrolled up high enough. 5-1 at 10:30. What was suggested was 55.95, 55.90.
Right below 6,000. Okay. Yeah,
Mm-hmm.
that
And
makes
that
sense. And
trade
yep, that makes
would have
sense.
been successful. Yeah, based on what we saw, based on gamma, based on all the things, it would have
And
been successful. Mhm.
before the red zone. Now that we know what the red zone is, before I think at least I interpreted that the
Yeah.
red zone, if you get below it, it's fine. But
Yeah.
actually
Yeah,
your training teaches above it.
yeah.
And I think the reason I wouldn't have thought about it is because that's near the psychological number also. So it just so happens to be both of those have been hitting both psychological numbers
Yeah.
near the psychological, excuse me.
Mm-hmm. Mm-hmm. Yep. Well, Tawana, thanks for asking us to go through it, and together to go through the Magic 8-Ball Gamma look along with the chart. I hope that now, so when I put, because I know sometimes I've been putting, I know Mr. Mack and a few other people, he probably wasn't the only one, he's the only one that was saying something. When you're seeing these charts, you're like, what is that? And we've talked about it, and I've talked about what I knew about it, which wasn't a whole bunch. But I was determined this morning, not that I don't want to know for y'all, but I be trying to know for me too. And so I woke up this morning very interested in trying to figure it out, because I want to make sure that we're using the tools that are available to us, so that way we can capitalize off of where we are. So we do know I gave us another, I want to bring our chat up. I am going to do a little bit of charting. We'll do a little bit of charting. I put a lot of stuff in our chat today. I put a lot of stuff in our chat today. This is one graphic I did bring us from our training yesterday. It includes the SPX top times, also good times or window, and acceptable window here. So you got some things that you can look at there. Okay. As far as time of entries and that kind of thing, I am going to continue to look at that 10:30, 10:40, that area. We do know, if you know, we just spent a lot of time talking about why the 10:30 window is a good one. And then there's times through the day where there may be additional opportunities, even if there's nothing more than to see how is price moving through the day to enter again or to enter the other side, however we see it. But we've got this information is in our Telegram chat, so you can go with your trading. The whole thing we're looking at is how do we increase our confidence and increase our win rates. Right? We want to increase our confidence and our win rate, and we're not going to get greedy. If you are in your trade and it's doing what you need it to do and you can close it with a PDT hack, then let's do that. Right? We'd rather have a sure 50 than a questionable 85. All right, let's be wise so we can continue to build. All right. Let me see, what else did I put in here that we might need? I put a lot of information from my learnings this morning, and then I did put a link to the PDF page. Let me see if I can open it up and you all can see what it is. Where did I put it? Oh, there it is. It's hiding in. Oh, it needs to be much bigger. The Gamma Playbook, SPX Gamma Playbook. It's a Word document. I need to put some more stuff with this so it doesn't get lost in the shuffle, because it will get lost. It's opening up my other screen. This is a Word. This is basically, as ChatGPT was doing all the stuff, it was putting it together into a PDF for me. And this is what it put into the Gamma Made Simple, the Gamma Mood Meter for your daily checklist. I put some graphics in here, graphics as far as, you know, a table, not really a graphic. The green magnet, or the red is a ramp, that's here. The pink dots, what do those mean? Understanding the Gamma values, the trade timing, when do we look at stuff? We did not need number 7. I don't know why he put partner plan. Okay. There we go. Gamma and VWAP and volume. We got other things that we can use to help support us. And then what's on the GEXBot chart? The GEXBot is the one that goes side by side, lets us know what's there. I don't think I put that little bit of piece at the end. I might not have put that on here. I'll make sure I do that. And I may put this into a Google document so it can be more easily accessible. But that's linked. This is now linked inside of our Telegram. Okay. I'm going to minimize it so I can make sure I do what I need to do. All righty. Questions?
Thank you. That was so helpful.
Yes, ma'am. Thank you for the heavy lift today. Although it was early, I was getting ready for Sunday school. You was pinging. Who is that?
Is that?
Lord, Lord, get her.
Well, you know, I go to church on Sunday evenings because my church has services all day
Yes,
Saturday.
ma'am.
I mean, Sunday and all day Sunday. So
I remembered that.
oh
I
yeah.
sure did.
So and then I was still learning to do it. I was watching some other church services, but I was still learning about Gamma and grading papers and doing all the things. Doing all the things.
So let me ask you this. So I just downloaded the Magic Ball 8, and do you use it on your phone or do you use desktop?
Magic 8 Ball?
Mm-hmm.
I have it in both places. I have Discord on both places.
Okay, all right.
So yeah, I have Discord on my phone and on my computer, so I'm able to see it in both places.
Okay, so I have it on my phone, but it doesn't look the same as I have on the desktop. So
Really?
I'll work through that.
Yeah, it should be the same.
I know. And my
Yeah.
second question is, I have Robinhood, and on the SPX, I'm not able to set alerts. Do you set alerts on your Robinhood on your phone?
I do not. So
Okay.
you can use Robinhood doesn't do alerts, I don't think, but you can use something like Yahoo Finance, I think, does alerts.
Okay.
Or if you do Trading View, they do alerts. Yeah, you might have to use another. You might have to use another.
Okay, all right. Just
Something
wondering.
else to use alerts. Yeah.
I'm learning.
Oh yeah.
Okay. Appreciate you.
Yeah, you're welcome. All righty. Let's pick just a couple things off our list and see if we want to do any charting.
Gold.
Want to look at gold.
Microsoft.
Okay. There's one guy in my impact community who is dead set on the fact that gold is getting ready to pull back. He keeps harping on it. It don't seem to be happening. They did have a little bit of a.
You mean further down? Okay, that makes it more affordable.
Oh, okay. Well, he's thinking it's gonna pull back, but let's see. No, this is not where I wanted to go. I was trying to get is the E2T membership trades only for certain members? It's only for the people who are in the membership. Did you not get the link, Mel? If you didn't get the link to get the trade, no, it's for everybody who's in it, who's a member. They need to be. I thought I got everybody, but if I didn't get you, please let me know so that I can Okay, so now, send me, put in the Telegram group. I didn't get the link, so that way I can go straight from there to put it in yours, because I sent it to people personally on Telegram. So make sure that you didn't get it as a personal Telegram message. But send me a message inside, well, put a message inside of the Telegram group that you didn't get the link. So that way I can make sure you get it. Okay. If you didn't have the link, and I need to add, I think we've got some new people who just recently joined. I want to make sure that you get added as well. Make sure all the people get the link to the trades channel. Add the people, add the people, add the people, add the people. I think I sent you one, Mel. Are you sure? Have you looked at your individual? Have you looked into your messages here on Telegram, your personal messages? Because I kind of feel like I sent you one. Put you. Yep, it's right there. MX Mel Anderson. I sent it right there. DeCombie is another one I need to send a message to because he recently joined us. Hold on, y'all. Let's see where. Oh, there we go. Add the contacts. Nope. And done, and send a message. There we go. All righty. Everybody else who's here has access to the trades channel, I hope. Can I get the link, please? Absolutely. Add to contacts. Done. Send a message. Anybody else not have the link to the trades channel? Okay.
Have you been calling SPX a wild woman around Chad? For him to call her a spicy cat?
Maybe. You know, all these computer apps listen to everything.
So true.
Everything. Yep. You know, they be listening. Yeah, I was talking to my husband the other day in the kitchen, and he said something, and I raised my voice. I wasn't yelling at him, but in the midst of our conversation, my voice elevated, and then I saw our little friend that sits on the counter, whose name starts with an A. I saw her lights start to go in circles. Ain't nobody said her name. Ain't nobody called you. And all of a sudden, as soon as my voice raised up, I saw the light started going around. I told you wasn't listening because you ain't talking to you.
Nosy.
Because I ain't talking to you. But I see your light is now moving, which means you have now tuned in.
That's that juicy conversation she was talking about.
She's like, oh, let me see what's happening over here. I said, take this a blip. Tuned right in. I saw the blue light kick on. Okay, we're looking at gold. Gold on the daily charts. What I do need, which I need to turn it back on, is my moving averages. I usually have, I don't know if Jared's on the call. Where are my? Okay, wait, I know I need to do. Yeah, so I need to load my style. There we go. So I can have my pieces and parts. I'm supposed to have my stuff. Where's my stuff? Where's my stuff? Cancel. I need my moving averages. That's one, but that's not all of them. Must not be the one I need. 8, I need one more. And it's easier for me to just go ahead and add it than it is for me to fight with you. Exponential. Add one more, and I need this to be the 50. My 50 is blue, and it's usually thicker. There we go. Let's just do it like that. Jared, are you on here? Okay. All righty. So
You have an 8-day moving average?
9. It should say 9.
Oh, okay. I thought it said 8.
It's
So
it should
8, 50,
8,
200,
50, 20,
or
100, and 200.
20.
Usually I have,
So not 100. Okay.
yeah. I usually do the 100 as well. I don't know why all my moving averages are not on this chart, but they usually have the 8, the 20, the 50, 100, and the 200. Those are the ones I usually have. Candles. I want my candles filled. I don't know why my stuff is not looking the way it usually is looking.
I experienced that before, and I was like, please tell me I don't gotta keep doing this over.
Right, right. And I usually save I know what I can do. I can save my style. Save the style. I'll save it as Oliver. Okay. So, okay. I have to edit and adjust it after this because it's not quite the way I like it, but this will get what we need, where we need to go. Gold looks like we've got some support down here at 297.9. Or we're looking at a put credit spread, right? Yep. There's also support in the 290, basically in the 297, 290, right in the same area here. Okay. Let me send him a message. Hold on real quick, y'all. Oh, I said 39 minutes. I meant 30 minutes. Okay. Support I see is right in the 297 area. There's also a hammer in here too. All that's in the 297 area. Our strike we have is 294, 295, which is below this. Are we on? I said, this seems like I am not on the daily chart. How about we get where we need to be? It's like these are all too close together. There we go. How about we get in a place that makes sense? I got a new plan. New plan. Clear the drawings. Yep. All of y'all can go. There we go. This is gold. Got us a gap that needs to fill above now, which is going to provide some resistance. Support is still in the 297 area, but there is resistance above. That moving average is also up there. That's going to be the 20. Maybe no, that may be the 9 is up here, the 9-day, right in the middle of the gap. So we've just gonna, in order for it to be a put credit spread, it's gonna have some headwinds. It's gonna have a little bit of headwinds there to face. So that's gonna be the difficulty there. Let's see what we see though. There's a gap underneath here. It goes about here. Gap starts at 295, well, ends at 295. It's going, that will provide some support if price were to come down to it. The bottom of that gap is 292, so it's a pretty good sized gap. Let's look at what our premiums look like, because we may decide that we want to get a little further down. 295 is, wait, you know what though? I'm wondering if I went to the next date and didn't go to the 9th. Yep, 295. We might do, although I think I looked at the wrong date. Because that puts us a little closer than I'd want us to be. Oh yeah, 292. This should be changed to 292. Okay, give me a pencil. Yeah, this should be, I'd go with maybe 291, 292. I looked at the 5th. 295 would be 64% probability out of the money. That's a little close. 291, 292 would pay about $21 for Friday's expiration. Now, gold expires multiple times during the week, so you really could trade gold several times. You don't have to wait till Friday, but I do this list for all with Friday's expirations. So Friday would be $21 at 292.
Alyssa,
Yep.
will you ever consider studying crypto? It's a little, I guess, a little too difficult for you.
Well, I mean, I've looked at crypto before. It's just too many things to, I mean, not too many things, too many different parts of crypto, too many different crypto things to look at.
Yeah,
I
I know. That's what I
understand, yeah.
figured.
Yeah. I mean, the charting is the same. So if you are interested in crypto, I mean, you still do, you can chart. If you can chart here, you can chart for crypto, and the same thing it happens. You use the same skills are used when you're doing crypto.
Oh, okay.
Mm-hmm. But no,
So it's not so hard. It's just a little different. You
it's
chart the
just
same, but a
different.
little different aspect. You said.
Yeah, a lot of people
Okay.
like crypto because you can trade it in the off hours. If you work crazy hours and you want to be able to trade through the night or whatever, some people trade it because of that. But yeah. Okay, we want to go to Microsoft. Mm-hmm. Let's go to Microsoft. Microsoft is in the neutral zone, and I said on the call, I think it's only in the neutral zone because it's flipping over from being bearish to being bullish. That's what put it in the neutral, but it's definitely turned over nicely after it had its big jump for earnings. So let's put us some stuff on the chart. It closed here and opened up there. So there's a gap that was left below on the earnings. If you're looking at the put credit spread, now this would be the difficulty. I guess you could call it a difficulty. You would think about, I would want to do maybe I'll freehand it, but you'd want to look at maybe 4, like halfway through the gap is maybe about here. That's about a halfway mark. And then half of that. So you want to break the gap out into quadrants. I'll show you that if it comes back into the gap, it'll probably fill in quartiles. The price I gave was 422.5, which is about in here. Is that support? It's about in this area. Because price is now at 435, just 13 points away from that. Let's go look though and see where would there be some resistance, because I also have it as 447. I don't know, when's the last time Microsoft was, it's not too far up here. I said it hadn't been that, that far away from it's been a minute since it's been up here, but it does have some resistance zones to work with. Okay, we're always looking for support and resistance, all right? For those of us who are still learning charting, we're starting at the very minimum with support and resistance and looking at the gaps. Looking for support, resistance, and the gaps. That's the very minimum. Okay, current price is here. We're looking up and to the left. This is our first resistance. We're at just below 450. And there's another one here looking for peaks and valleys. There's also some support right in here, almost near price where price currently is 433. There's some support and or resistance right in there. Okay, resistance is at 446. I have us as 447.5 as our call credit spread, which is above this line. And as far as support goes, looking back here, we've got support at 415. Oh goodness, come on. Support in this 415 area. If you're not sure how to see support and resistance, change it to a line chart so that way you can see. 415 is one. There's another one right in here at 418. I may need to change it to a line chart too because it's getting crowded off in there. Right in here. See some support and resistance back from January is where you see some places where there's some support and resistance. Okay. Support is actually at the top of this gap now, at the bottom of this candle, and that's based on what happened in January too. Right, it gapped up. Basically, what happened when it had earnings, this is what happened. Price gapped up. It jumped up to here, jumped up to this spot right here, and then it pulled back during the day to the spot on the gap, and then it went up from there. This lets you know that this was the support. This is basically where it pulled back to, and then the next day it gapped up. Honestly, there's another gap there. I need to mark that because the gap, remember, is from the close of one candle to the open of the other. So it closed at the bottom of this red candle and it opened up here. So there's another gap between these red and green. Remember, I told you all, anytime you see a color change, there may be a gap there. Just because there's no room between the two candles doesn't mean there's not a gap. Okay, the color change, close of one candle to the open of the next is where a gap is created. All right, so there's another gap here. 422 is what we've got, 420, 422.5, and 447, 440, 450. And I gave room as far as the deltas and stuff went. I gave room because I wanted to, since we were looking at an iron condor, you could give more room on each side and take in a little bit less premium and give yourself room to not get breached. 420, 422.5, of course, market is closed. That side's paying $23. And 447.5, 450, that's paying $33. So a total of $56. 56 if you did the whole iron condor, $56 if you did it right now today. But of course, as price moves a little bit, you can actually take in different premiums as price moves through the week. And $56 though for a 2.5 spread, it's a 20% return. Yeah, questions?
Yes, I do have a question about the quartile filling. Okay, so when it feels, I understand that it can do it, 25% at the time, but does that also mean, so like if it does that, let's say that closest 25%, it could then, let's say in this case, go up, the price could increase away from the gap, and then it could come back down, and
Yep.
then now it's going to that 50% mark.
Yep.
But it doesn't necessarily have to keep going down to fill that gap. It could still go, back up, but then
Yep.
when it comes back down again, okay.
Yep.
Okay.
It could do either one, because sometimes it'll feel just a 25% and bounce. Sometimes it'll feel halfway and go back up. But if the gap is a big gap, it generally doesn't feel all at one time. It usually feels in parts and pieces. And that gap is a big one because it was formed by earnings. Also, earnings gaps don't generally feel quickly either, because an earnings gap is one that is created based on a change in sentiment. Basically, the people who own the stock change their thoughts. So either they buy a bunch or they sell a bunch. So generally, when a big move like that happens for one way or the other, the sentiment, if it gapped up like that, means they decided overnight they really wanted to own more. So they don't necessarily feel quickly. That don't mean they don't feel. They just don't necessarily feel quickly.
Okay, that makes sense. I'm really watching because we still have two big gaps in SPX somewhere. So I'm really concerned about those with that
SPX filled that
5,700.
top big gap last week, the one that was up to 56 something. I think it's a little bit left of it at the top, but it filled that
Exactly,
gap.
exactly. That's why I was pretty certain it wouldn't hit the 5,700, which it didn't. Well, like close at 5,700.
Right.
But I'm leery of it for this week. But then we also have a lower level gap as well
Right.
that hasn't filled.
Yeah.
Okay, thank you.
Yeah. What other stock we want to look at on here? I got about 20 more minutes, then I got to do a one-on-one. Nothing, we're good. All right. We have been here 2 hours. I'm gonna go eat some food before I have my one-on-one.
How about Johnson & Johnson?
Okay. I think Johnson & Johnson is actually on the bullish list. I didn't put it on our list over there because
I came in later, so you've been doing mostly a bearish list tonight?
Say again?
You specified that Johnson & Johnson was on the bullish list. So you're
Oh, I
doing
know. I
that.
wasn't saying that. I was saying I thought I remembered it was on that list. I'm not picking one side or the other. I'm just saying I thought I remembered seeing it on the list, on the watch list as bearish, but it might not be. It looks like it's kind of flat. Well, it was bearish, a little bit, slightly. Looks like it might be. So what are you thinking you want to do?
Well, what I want to do, I don't know, if I were to pick Johnson & Johnson, maybe I'd do like you say it was bullish, maybe the call credit spread. That's for.
Well, yeah, it's looking kind of bearish actually. This trend it's kind of flat looking. Let's see. Yeah, it's looking kind of flat to be honest. Let's see. Single.
Oh, you say it look kind of bearish, you say?
Yeah, it's kind of flat. You can see I use the blue moving average. It's the 50-period moving average. And when it's going down, that's of course bearish, and going up, it's bullish. Right now, it was going down, but it's kind of sitting flat with a little bit of bearish tendency, but it's kind of been sitting in a zone for a little bit. So all the moving averages are kind of here together. Notice how all three of the moving averages that I have are all here together. None of them, it hasn't really broken out of which direction it's going. So, it might provide a little, I see some support and I see some resistance. So let's look at both sides. I don't know why that chart is not linking. There we go. How about we link together? So when I pick one, you are together. Johnson and Johnson. Okay, so if we're looking on the put credit spread side or underneath it, we can go with 150, 152.5. So if we're looking, okay, we could go with 150, 152.5. We were looking on the bottom side. That's gonna pay about $18 today. Market's closed, so these, the numbers change.
Mhm.
And then if we're looking at the top side, we want to go above. I probably want to go above that moving average, which is 156, and the resistance is 158. Let's see what the option chain shows. Either above 156 or 158. Well, actually, it's a 2.5 spread. So 160 is a good little strike. So 160, 162.5 be the other one. 160, 162.5 if you wanted to do an iron condor, which it looks like it could potentially could do fine there. 160, 162.5. That's another $14. So $32 total. The bottom was 18 and the top is 14. $32 total for the iron condor if you wanted to do the call credit spread and the put credit spread. So this would be CCS and this would be PCS.
You said 32 and 14?
No, I said 18. This one was 18 and this one was 14.
32, all right.
All right, Tawana, see you. That's a total of 32, but you wanna, when the market opens, those numbers will be a little different. So you wanna get what you can, get as much as you can, and also check the strikes and make sure they're still good. Because depending on how the market opens, it may shift up or down and you might see some better set of strikes. And anytime you looking at a stock and you're not sure which strikes will be good, just ask in the chat. We can look and see.
Okay.
Okay.
That feels close. I mean, the IV is $3, over 3.
It's right at
The
3.
next move is right at 160.
Yep, it does feel close. That's why you would look to see for sure to make sure that whatever move was next, that you went with that next move as far as selecting your strikes. Yeah, 160 puts you up above both of these resistance places. So from the standpoint of location of the strike, it's 160 is fine. 160 is on the chart, right? 160 is here, which is above these two resistance places and above a moving average. So it's above 3 resistance places. So 160 it's not a bad place to be from a chart standpoint either. It feels close from a dollar standpoint. I get what you're saying, Janae. And then 152 is down here, which is below all of these wicks. So even though it feels close, it's right, all of this consolidation. Now, but it's consolidating, and at some point it may decide it's ready to move, and you don't want it to move while you're there. True, true. All righty. Okay, you all, I'm gonna catch y'all in the morning at 8:45. And once this is ready, I'm gonna load it up because we covered a lot of stuff with Gamma, and you all may want to kind of re-listen or re-watch what we talked about during Gamma, look at some of those pictures and link it together as we get ready for this week. All righty. All righty. I'm going to see y'all in the morning. All right, y'all.
Thank you.
Thank
Good
you.
night.
Thank you. Good night,
All
everyone.
right, y'all have a good night.
Thank you.
Nice. Y'all tomorrow.
All right, bye-bye.